The Russian invasion of Ukraine continues. Pain can be felt all over the world. News 12's Brian Armstrong has the story of its impacting the short and long-term investor.
Is rising so dramatically that starts to cut into the family budget. So we're going to see, other than at the gas pump, consumer spending start to take a hit.
In Ukraine, it's terrifying shelling and shootings that are the number one concern. Thankfully, currently in the U.S., it's more subtle as gas prices soar and the stock market continues to rise and fall like a roller coaster and is overall down. Financial analyst Chris Hopkins says this is due to several reasons, one of which is companies are pulling out of Russia, which is decreasing profits.
Now, we applaud that, certainly, from a political perspective. That's the right thing to do, clearly, and a lot of corporations are making that move on their own. But, of course, that's going to eat into their margins as well.
Another is the market goes down in the short term whenever there is a geopolitical conflict, such as the Russia invasion or events like 9/11.
Markets are pretty resilient and that they recover pretty quickly from these kind of global uncertainties. We know after 9/11, it didn't take long for the market to recover. It certainly has recovered rapidly after the Iran war.
Hopkins says what's going on in the invasion is terrible, but economically speaking, in the most likely scenarios, this means stocks and index funds are currently on sale for long-term investors.
This is one of those times where American investors, retirement savers, just take the ride. If you've got a little cash on the sideline, you don't rush out and buy everything, but maybe you put a little bit more capital to work now that stocks are on sale.
Now, some people have pointed to the huge stock market drop in March of 2020, just 2 years ago, but Hopkins says we are nowhere near that point. Brian Armstrong, News 12 Now.